Now, I know it's always smart when you're predicting what you think is going to happen in the future to say you don't have a crystal ball. We don't know what's going to happen. So I'm going to take a look back at a video that I did and I sent out in February of 2022, predicting what we were going to expect to see happen in the housing market, well, this year. And now we're at the end of the year here, so I figured a fun recap would be a good idea. Now, when I say this, I'm going to preface by saying that, well, of course we don't have a crystal ball, but we do follow actual data. I'm not following my feelings, maybe a little bit, but we're following actual hard data of what our consumers are saying, what our numbers are saying with our massive client base, as well as looking at nationwide and local statistics. So we're going to dive into what my housing market prediction was for this year, how we're going to compare it to what we see for the following year. And if you don't know who I am, my name is Christian, co-founder, team leader here at the SB Luxury Group. So if you see me looking off to the side, I am watching this video here with you. So let's dive in. So we have the email I sent out. Hey, everybody's been asking what in the world is going on in real estate. What do we think is going to keep happening? Don't have a crystal ball. I should have read that email first.
Hey guys, it's Christian here. This is going to be my 2022 housing market prediction. What I think is going to go on in the market, what we are seeing between myself, my clients, our team. We have a lot of volume, so one of the nicest things about that is we get to see trends, particularly before they actually start happening. So here's what I would like to share with you and what we're seeing in the market. It is the very beginning of 2022. One of the most important talking points that a lot of people are rumbling about right now are that rates are going to increase. The Fed has announced that they're going to raise rates 3 times this year.
I wish it was only 3 times. This is something that is surprising for a lot of our clients we're talking with right now. And it's amazing to me when I'm talking to some agents that were surprised at rates this year. Now, I will say everybody, and I'll get to it, I'm sure, in this video. I haven't watched this since I filmed it a year ago. Everybody was surprised at the velocity, meaning how quickly rates went from 2.5 to 7%. But rates going up should never have been a surprise. We ran this as an ad as well too, and a lot of people saw it. Got a lot of feedback. This is the prices are going to keep going, prices are going to cry, whatever it might be. Really interesting, but it was no surprise. Should have been no surprise that rates were going to increase this year.
And here's what's happened. What we thought was going to take a couple months took a couple days. Rates have moved from what we've been used to, about that 3.25 range, to about 3.75. Now, how does that affect the market? How does it affect you?
Now, wouldn't we kill to have been like, oh shoot, rates jumped? This was set in February. March was by far our biggest month. So we had a lot of clients and we said, hey, we knew this was going to happen. We got to make sure we get in before rates go way higher.
Let's just use $1 million purchase price. If you're looking at the difference between 3.25 and 3.75, that 0.5% difference is really only going to affect the payment somewhere between $200 and $300. This isn't an astronomical difference for most people. Now, is it going to affect buying power? Absolutely. Just the same as raising prices have been continuously affecting buyer power.
So I'll preface this as well too, because our clients at this time were freaking out that rates have gone up 0.25% or 0.5%. In context from then, they've barely gone up a full percent because we were at 2.675 for a little while there in 21. And this was a huge jump. This was a big, scary moment. And a lot of people were asking, like, oh my gosh, is it still a good idea to buy a home at almost a 4% interest rate? And for the clients that are looking right now, we've seen rates jump from 7.5 back down to 6.5 or even lower. We'll see where they land. But it's interesting to see. It's all about perspective.
So here's what we're seeing. There is an unbelievable shortage in the housing market in Orange County. To give context, there are typically, on average, about 6,000 homes for sale in Orange County at a neutral market, meaning it's not a seller's market, it's not a buyer's market. There's usually about 6,500 homes for sale, which you could expect that home to take 90 days to sell or so. We have about 950 homes on the market. We're hovering right under 1,000, right around 1,000 homes right now in the market. It is insane how few homes are on the market, and if you've been following it all, you know that homes are going very, very quickly. Now, here's what's happening is not every single house is selling for millions of dollars or hundreds of thousands of dollars over list price. It really just depends. I was talking to clients just today, and I always tell my clients this: list price is almost irrelevant because there are just as many people underpricing their properties as there are overpricing their properties. And then there's that middle ground where they price it right where they should, and it sells very close to list price. So I always say it really is it just depends.
That is still true today. So I would flip it and say that there are so many people that are either completely uneducated to what's going on in the market right now, either agents or there's a lot of agents, but agents or consumers, or they're just saying, hey, I'm going to shoot for the record sale in the neighborhood. And if I don't get it, oh well. List price is irrelevant almost all the time. Just depends on the market. Last year and the year before, if it was listed for $1 million, buyers just assumed they were going to have to pay 1.2 to buy that house, which was ridiculous. That house might be worth 900 and they listed it at $1 million. That doesn't mean it's going to sell for 1.2. So my always advice, which I'm sure I'm going to get to here, is you got to really figure out, do I like the house and what is this thing worth on all of them, right? Because you have houses right now that are listed at $1 million that are worth 800, right? The maybe would have sold for 900 last year, but sellers have unrealistic expectations and it can make a huge difference on what that house actually sells for. Let's continue.
Check with me, send me a screenshot of the property if you think it's anywhere in your realm of possibilities, and I'll tell you whether or not that's priced below comps, over comps, right at comps, and where I think it should sell in the marketplace. That's number one. Number two is to be extremely diligent about staying out there and looking. With rates expected to increase and prices are still expected to increase. The raising of the rates 0.5%, I'll tell you just from watching it over the last week.
This was in February, which if I showed you a chart of pricing when continued to go up, so interest rates ticked up from 3.25 to 3.75 and prices skyrocketed in February, March, April, May. May or June is arguably the month where it peaked. I suppose it depends on where you're looking, but overall Orange County, it was May, I believe, that was the peak. June was a little bit lower. So right after that comment was exactly when the housing market really, really took off. Not that it wasn't already. That's when a lot of people got in on the market.
Watching it over the last week isn't affecting anything. There are still a ton of buyers out there shopping for properties. When we were seeing in December, everybody on our team, we were talking to our clients, everybody was saying we're going to wait till the beginning of the year to start shopping for the house. Well, that's what everyone's doing. Everybody's out there looking at properties. There are not very many properties to look at, so a lot of
I thought I was going to mention on this. This is right now. This is the window of opportunity, the last 2 weeks of the year, while everybody's asleep at the wheel, waiting for Christmas vacation or whatever holiday you're celebrating, and you're just figuring out, I'd love to get out of this condo. I'd love to upgrade down, whatever it might be. I want to make this move, but I'm going to start at the beginning of the year. Just like we're going to start going to the gym at the beginning of the year on our diet next Monday and all of that stuff is right now, if you are on the fence about buying a house, all I ask for my clients is, hey, let's just keep an open mind that if we see something, we'll at least entertain it and not just write it off till the end of the year. Every single year, there are clients that purchase in this November, December window, especially here at the end of the year, and they take advantage of that market. Anybody that has their house on the market with a Christmas tree in the living room has some motivation outside of obviously they just want to sell the home. So you want to make sure that you have the utmost opportunity. So if you are out there thinking at all, I would definitely recommend keeping your eyes peeled.
Sometimes you go to an open house, there's a ton of people there. Now, I'm not saying any of this to discourage you. I'm saying this as a positive. Here's what the reality is. I don't think prices are going to increase quite as much as they have over the last 2 years. That's good news if you're a home buyer. I don't see 20% appreciation like we've seen the last 2 years. I think we're going to see somewhere in the ballpark 4 to 6% appreciation along with rates going up. It's going to get more expensive to buy homes as we wait. So if you're on the fence right now and you're thinking, do I need to buy a home? Do I need to change my living situation? My advice is to start seriously looking sooner than later because it might take a little bit to find that perfect house. Here's the flip side of it. If you own a home and you're waiting for that perfect deal, that's totally fine. But if you're looking to rent and you want to change your living situation, I would recommend doing that sooner than later. It really just depends. Everybody has a different housing circumstance. If you're looking to sell your home at the peak of the market and you have somewhere else you're already living, you don't have to worry about it, that might not be a bad idea. I think it's a fantastic time to sell. Now, if you're a seller that also needs to purchase, that is where I would say let's look at expediting your timelines, because yes, your house is going to continuously appreciating, but so is the house that you're probably going to purchase, and rates are the variable that are going to make that difference make sense sooner than later most of the time. So depending on what your situation is, I just wanted to send a market update to all my clients here. I hope this was helpful. To go over your specific situation, just contact me. You have my information. Let's talk about it. Take care.
So that is really the story. This was what we were talking about last year. So if you're a consumer and you're looking about making a move now or next year, and there's just so much uncertainty and so much scared of what's going on, here's the summary of what happened last year. Prices went way up and then they came down because interest rates were really low and then went up. Nobody expected for interest rates to go from 3 to 7% almost overnight. It was not too long after this video that rates went up, and we went 5 to 7%. My point here is overall appreciation in Southern California for the year 2022 was pretty much flat. I said 5 or 6% was my guess for appreciation. That was not factoring in 7% interest rates. So I saw prices at some point had to break off and stop going up, and they came down. So what we saw is this last year, prices really went up about 15-20%, which I didn't see happening. When we hit that peak in May or June, they broke off and we've come back down about 10 or 15%. We're flat on this year. So if you would have bought a house in January versus you're buying a house now in November, December, probably getting about the same deal on the house as far as price goes. Now, the leverage is just completely changed. January of this last year, you would have had 20 other offers you were competing against and you were happy or lucky to get the house. And now you're able to negotiate your terms. You're getting your inspections, you're getting your appraisals. We're back to a normal market. My prediction for next year is this. And I said this before, it's really going to depend on what happens in the overall economy. If inflation does not get under control, rates will stay high. If rates stay high, prices will likely not increase. Your major economists are all predicting either the lowest that I've seen is down 5-10%, the highest that I've seen is up 5 or 10%. A relatively flat year in real estate, which the important part in a flat year is to make sure that you get the best deal possible. You need to have your agent making sure that you're negotiating that best deal. We have a ton of strategies on how to do that. You're finding all the off-market properties. You have all the opportunities. This is your time as a consumer to take advantage. We see a ton of investors coming into the market. Most investors do not buy with the anticipation of prices going down. So if you're looking for your property or you're thinking about selling or whatever it might be, it's a neutral landscape. So if you're buying, you can find deals. If you're selling, you can sell for a great price. Not as much as you would have 6 months ago, but if you're buying too, prices have come down. Everybody's just paying a higher interest rate in exchange for less competition, more opportunities, and they can negotiate their terms. So that's my overall idea of what I feel like is going to happen in the next year, 2023, is we're going to have a pretty flat year, up or down a couple of %, and there's going to be more homes to choose from. The pivot here is when rates do come back down, whether that be in 2023 or 2024, we are going to see a very aggressive market if we get back down to 5% interest rates or 4% interest rates. That's my prediction. Whenever that happens, whether it be middle of next year or middle of the year after that, that is what I see happening. So as always, if you have any questions, my name is Stubbs. Always reach out to myself or one of our local experts. If you like updates like this, register for our newsletter. ocmarketupdates.com is the easiest way to get there, and we'll see you then.